the global economy is recovering. And I believe that this risk-on sentiment would likely continue. And as a result, we have been mildly overweight on equities. Primarily, our overweights were in US and China equities. But recently, we have actually upgraded our view on Southeast Asia, in which we turned bullish on Singapore, as well as, of course, we turned neutral on Thailand on the back of this global economic recovery. But of course, on India's call, we want to be a bit more nuanced in our approach, because we think that the recovery is going to be very much uneven across various parts of the world. And of course, yes, there is a vaccine coming up very soon, but of course, implementation would be an issue. It's very difficult to predict at this stage the pace of implementation between and in different countries, and therefore I think we want to have a nuanced approach in our country investing as of now. But of course, a risk-on mode is likely to continue.
Sure. Then how do you rationalize 11% rally series to series in India in the month gone by? What is the market pricing in? What is the enthusiasm reflecting in India?
Well, I think in our view at this stage is that a lot of the good news is already priced into the Indian market as of now. And therefore, I think at this stage, what we are thinking about and advising investors is actually to be a little bit more judicious in the exposure there. And therefore, I think that's why we put a slight underweight in our Indian equity exposure. But of course, we are monitoring the situation from time to time, and I think we have to be fluid with our decisions as we go along, because these dynamics can change very quickly. But I think as of now, it is appropriate to just be a bit judicious and not chase this rally that's ongoing, especially in the Indian market.
James, this is Christine. I mean, we saw large gains for the month of November overall. Does this somehow lessen or increase the chance of a year-end Santa rally?
Well, I think the conditions for the rally is still very much in place. Particularly, the economic recovery is still ongoing. We are seeing a manufacturing recovery globally. And of course, you expect global trade to also pick up as a result. And also on the back of that, you have consumption still extremely robust, underpinned by quite strong housing market, despite COVID cases increasing in parts of the world. But of course, we have the good news of vaccines coming on, and I think that should encourage consumption and it should encourage some normalcy of life going into 2021. And therefore, I think going into December, you can expect the rally to continue on, given that I think the key factor is actually policy. And policy, particularly policy support for monetary makers and central banks, are still going to be extremely accommodative. And therefore, as a result, I think the foundations of this risk rally will likely continue into December.